tech has been the place that has seen the biggest hits. Joel, I know you think this is a space to invest for the long term. But what are you seeing in terms of these declines? Have we seen the worst, do you think? Are you looking for opportunities right now with the NASDAQ down 30% year to date?
Yeah, well, I agree with Mark and Sarah in that we're basically going to oscillate for the next few weeks until we see clear sailing on the inflation issue, whether or not inflation has peaked. And we'll find out probably by mid-July with the CPI numbers coming out. And as both your guests mentioned, earnings will start fairly soon, too, second quarter earnings season. However, with tech coming down so much, we're seeing some values now here on a relative growth on a relative PE to growth basis. So when we think about the value stocks, and you just mentioned how energy was the worst. In fact, Sarah mentioned energy was the worst performer in June. We saw the market shift a little bit. I think right now, tech for the long haul, it's a good time to start getting in a little bit, nibbling, on some of these opportunities on off days. And as your guest mentioned, we're seeing a volatile period where the markets are moving up and down for the last few weeks. We're going to continue to see that for the next few weeks. And we've got to remember when tech comes down, 70, 80, in some cases 90%, and stocks drop from $100 down to $20, a small move up from 20 to 30 is a 50% increase on that stock for that period of time. It's still down 70% for the year, but it can increase 50% from here. We see opportunities to move 20, 30 or more percent from the bottoms, for many of these tech stocks. And there's some opportunities right now. We think investors should start coming in. We think by mid-July, things are going to start clearing up in terms of where we're going for inflation. We believe that probably by that period, we're going to see inflation peaking. We've got to remember, we're coming in from the Fed is coming in from a period of strength. Interest rates are half of what they've traditionally been. And we also have to remember that unemployment is 2.5% or 2.25% below historical average is 5.75. It's currently 3.6. We've got a lot of room, a wiggle room, to absorb some of the problems that we've got in the next few months.
Yeah, I mean, look, we're talking about the worst first half of the year since 1962. All right, Sarah Ponchak, Joel Shulman, great to see you both this morning. Thank you so much.